This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a brand new Thursday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Morning, guys.
Hi. Good morning, Prashant. Good morning, Nigel.
Good morning.
The big news, I think, globally is NVIDIA's numbers, right? Fabulous set of numbers coming through. So, I don't know. The question that I'm asking this morning is leadership now moving from, moving to IT from banks, or, let's see how that plays out. But for now, at least, things are looking good.
What a big swing, right? Overnight. At one point of time, when it reacted, it was down 5%, and then after hours, it's up close to 9%. $250 billion of market capitalization swing in a matter of 15 minutes.
Absolutely, and those are the big numbers, really.
Yeah.
And I think, typically what happens is one day later after NVIDIA numbers, and we've seen this for many quarters, the entire AI the Magnificent Seven, so to speak, Meta and Amazon, and that pack does very well, which is, of course, that's 25% of the US market. So, US market perhaps has got that NVIDIA push now. I'll come to that in just a bit, but let's just begin by telling you what you need to know. And let's start with yesterday in terms of how we left off. Not in a very good way, right? So you had a sharp sell-off which emerged, and we basically sold off into close and ended about 0.6% lower. So there was a sell-off in between 2:30 and 3. There was a recovery, a sharp recovery, and then there was a sell-off again. So last hour was eventful. Mid-caps and small-caps saw profit booking off the lows, but about 1%, 1.33% lower. Mid-caps actually sold off more than small-cap, at least at the index level. Overnight, as far as the US close is concerned, it's not really one way or the other. It's a very tepid session. A little up, little down. NASDAQ down about 1/3%. But of course, NVIDIA numbers and the reaction came through after market hours. So after hours, the NVIDIA stock, if you look at where it's trading, it's up 9%. 9% higher in the NVIDIA stock. And, then you got to talk about the effect it may have on other stocks in that sort of arena. I'm talking AI very broadly, but that is what NVIDIA really represents, right? It's the Pied Piper for the entire AI theme. Meta is on that bandwagon. Of course, Meta's numbers recently were also pretty good. Everybody, there's Amazon, which is on it, Alphabet, which is on it, Apple maybe a little lesser so. But those are names which get a real boost with what NVIDIA has really reported. And as I said, 25% of the US market weight. A market as large as the US, these seven stocks are 25%. So can these results and what happens to that group do more for the US markets on the upside? That's a big question in a positive way. Now, FOMC minutes were the other highlight overnight, but there was little new info, in that sense, stale information. But there was some new information because intraday, Fed's Bauman basically said this, and I quote, "The time for lower rates is certainly not now." Now, that is coming in from a Fed governor and I think a voting member as well. So this was, of course, outside of the FOMC minutes, and it was a comment maybe made after the FOMC minutes, and markets took note of it. The 10-year went up 5 basis points. We're above 4.3. The dollar index is around 104. And oil prices are at about $83 a barrel as well. So not very much by way of change on oil prices. So where does it leave us now? We had a sharp sell-off. It's once again raised doubts whether we are getting into the midst of another one of those small or short-lived kind of pullbacks. It's possible, right? So the thing to do, as we've been saying, is to get in lower so your risk-reward is favorable and not chase market rallies. And to do that, you got to buy around averages. 21,800 is now the 20-day moving average for the Nifty. And the 40-day exponential moving average stands at 21,618. So these are the two levels on the Nifty to watch out for on the downside. And if the market is showing you signs that, it does not want to break, it's basically done with the upside and, basically the correction, and if there is a bounce, it's a bull trap. It should, to confirm that, it should not break the high of 22,249 that we saw yesterday. Two levels for the Nifty Bank as well, one support and one resistance. Support is the 40 hourly exponential moving average, which is 46,565. And on the way up, I mean, the Bank Nifty should not break above the high 47,363, which was the high which was made yesterday. So these are, essentially levels. The Gift Nifty will come up on your screen. What I would recommend is basically watch the first hour. And unlike what we've been saying for the last couple of days, you basically want confirmation that yesterday was just like one-off and the market strength and the uptrend in the very near term is also intact. So let the market trade for an hour, hour and a half. If it shows you strength, buy that strength. I mean, if it stays above those levels and gives you no sense of revisiting the lows, then you get more confidence that yesterday was just a one-off thing and maybe there is more to come here. So a little different this morning, but you just have to negate what we saw yesterday, and the only way that will happen is for price action to stay strong through the course of the day. I think 70 points higher on the Gift Nifty.
Well, absolutely. I mean, it's a big opening, right? 70 points higher is what the Gift Nifty is indicating. Yeah. And it's been what? Lifetime highs for 3 consecutive sessions now. So the going has been very, very good. The Nifty has been holding on to the 22,000 mark. But let's just understand what's happening with NVIDIA, right? As Prashant pointed out, very good set of numbers. But just look at it. In one quarter, the net income of NVIDIA was $12.2 billion. That compares to $1.4 billion same time last year. That's the kind of astronomical growth that NVIDIA has seen in one single quarter. And the management, the CEO made a mention saying that, don't be surprised if this trend in terms of growth continues, because what's happening now is there's an industry-wide shift away from central processors and to the accelerators that NVIDIA manufactures. So this is huge. And in our own markets as well, I would keep focus on a lot of these AI-related tech stocks, right? Whether it's Tata Elxsi, Persistent Systems, Zensar, Happiest Minds. So I would keep my eye on a lot of these technology stocks and particularly the AI-related stocks. So, that's one pocket I'm looking at. Of course, for the market, you do have the US Fed, as Prashant was also pointing out, the US Fed expressing some amount of caution about lowering interest rates too quickly and emphasizing the importance of carefully assessing incoming data. So it doesn't look like the rate cuts are coming anytime soon. At least that's the indication that you get from the Fed. Now, today, the investors will be looking out for the weekly jobless claims that come out. And there's the existing home sales data as well in the US that one could look forward to. Now, for our own markets, apart from the tech stocks and the AI-related stocks to look at, banks is what I'm watching very closely. Remember, the leadership in banks continues. And yesterday, there was large delivery buying. Even in terms of percentage of delivery buying, it has been much higher than preceding days. HDFC Bank continues to see big money coming in. So almost 2,200 crores of delivery buying in HDFC Bank. ICICI Bank had 900 crores. IndusInd Bank 460 crores. Kotak 440 crores as well. So I think the leadership in private sector banks continues. But let's see how things go from here. Today would be an asset test. Given NVIDIA's strong numbers, if technology stocks come back, then that will be one trend to watch. But what are you looking at?
Well, since everyone's talking about NVIDIA, just to weigh in out there, 10 years ago, they did $3 to $4 billion of revenues. Yeah. In the last year, they did $61 billion of revenue. So that's telling you the kind of growth. Your revenue is going up 15 times in a span of 10, 12 years. Massive number out there. But let's focus on our markets. Yesterday, we had a bit of a down day, but not too much to worry, I think so, because on the Nifty open interest, as well as the Nifty Bank open interest, there was actually some unwinding of positions. And by the end of it, well, you know that the Nifty Bank played out weekly expiry, and that's the reason towards the end, maybe you had a weekly expiry-related factor that did play out, and that's why the Nifty Bank did end a little bit lower. What you need to watch out for on the downside is the 50 DMA. That's still defended. That's closer to 250 points away from current levels. So in the Nifty Bank, if you're looking at a chart, well, you'll pull up the Nifty Bank and you'll see that the 50 DMA, that's the nearest possible support on that one. What do the FIs do? They added 10,000 long contracts, 2,500 short contracts, still in the ratio of closer on 4:1. And they continue to remain net short. But now I think you'll require some delivery-based buying to push us higher, because the short positioning has come down drastically from more than around 1 lakh contracts. It's come down to around 55,000 contracts. So you'll require, some delivery-based buying now to push us higher, because bulk of the short covering has taken place. What about the options data? Today you have the Nifty that will be playing out the weekly expiry, and there was aggressive writing, and the call writers will be feeling very, very good. In a single trading session, from the start till the time you wound up, if you were writing calls, well, the call premium, it crashed by closer on a fifth. So that's the kind of writing that we've seen, and that's why the bears will be feeling confident that in the near term, maybe they can defend the 22,250 going by the options data. So you have a broad band. On the downside, 21,950, you still have the 22,000 put that has a fair bit of open interest. So on the downside, near-term range 21,950 should be important. And this is the broad band because the bears, they are positioned to defend that level. What's the stock I'm looking at? Plenty of talk about globally, right? So I'm just saying let's focus on an inward-facing sector. Let's focus on domestic-facing sector. Suntech Realty. Yesterday, in fact, the stock did quite well. Actually, in a weak market, the stock was holding up. It's on the verge of moving towards that 52-week high that it saw in November. And from there, it saw a sharp correction. It's crossed the 20 as well as the 50 DMA. So that's why I'm looking back on that stock. And also, if you look at the delivery-based buying yesterday, it was massive. 10 lakh shares in a single trading session. On an average in the last few sessions, if you take a 10-day average, it's around 2 lakh. So the delivery yesterday was 5 times what we see on an average. So that's one stock that I'm keeping an eye out on as it crossed the 20, the 50 DMA, and also it saw some bit of delivery-based buying.
Okay, thanks a lot for that, Nigel. There are plenty of stocks to talk about. That Grasim is making its foray into the paint sector. So I think that'll be the big thing to watch as we get into trade this morning. But in the meantime, we have some commentary coming in on the equity front as well. Rupal Agarwal of Bernstein says that the PSU index is expensive, trading at 11.2 times forward price to earnings and 1.8 times price to book, which is the 1+ standard deviation to the historical average. However, she says, relative to the broader markets, which is the BSE 500, the PSU portfolio is still trading below the historical mean on 12-month forward price to earnings and just slightly above the mean on price to book. Rupal says industrial PSU stocks are the most stretched, trading at 2.5 times standard deviation to their 10-year price to earnings average. Typically, she adds, PSUs trade at a discount to the market. However, now industrial PSUs are trading at a 35% premium to the broader market. Utilities is the second most stretched PSU sector, trading at 1.5 times standard deviation levels.
Okay, some money market views coming in. Parul Mittalson of Sansi says that the USD INR is trended lower in the week in line with marginally weaker US dollar. She says volatility in USD INR remains low as we continue to see inflows being absorbed by the local banks. She expects the USD INR to trade between 82.8 to 83.1 to the dollar in the coming week.
All right, and on the bonds, Parul says that the Indian government bond yields moved lower as FPI inflows continued into bonds. She says overnight rates have been volatile but have started trending lower on increased VRR auctions by the RBI. She expects the 10-year benchmark bond yield to trade in a range of 7 to 7.1% in the near term.